everybody, what's going on? Your weekend edition of the Strategic Swing Trader is coming to you a day early. I usually post this video on the weekend, but I have other plans for the weekend, so I wanted to get the video out a day early. Okay, so here we go. The market had what we call a trend day today, basically the most bullish day you can get. On average, we probably get a trend day once a month or so, and we got it today. And the bulls never let up until about probably 2:30 in the afternoon, and we stayed really strong, closing near the top. Now, I'm very much against establishing strong biases, or biases I should say, based on just one bar events. One bar events, no matter how powerful, look at yesterday's bar, no matter how powerful they may look, are not to be believed, so to speak, until they produce follow-through. What is follow-through? Follow-through is when you get a second bar that closes above the close of the previous day, right? If we're talking about a green bar. If it's a red bar, we want to see another red bar. So we need to have follow-through. Notice the wide range green bar there. How much follow-through did we get? None at all. We got a red bar. And this bearish, extremely bearish red bar, what kind of follow-through did we get to that? No follow-through. Having said that, it does look like we're going to go higher, and perhaps we get a narrow range bar on Monday, and then maybe on Tuesday we continue higher. That would be good too, if we can get a setup like this. But it's premature to say which direction until we get, again, at least a two-bar combination. We either get two or three. We either get another green bar, or if we get a doji bar and then we take it out, then that's a 1, 2, 3 setup. That would also constitute follow-through. So Monday will be very important, Monday or Tuesday, and we should have a good idea of where the market is headed for the next probably several weeks, just based on what we do early next week. I took a hedge against my my 401k. I went to cash 100% to cash on October 4th, okay, in my 401k, and then I went back in, but only 50%. I don't honestly remember if it was on the 26th or the 27th, and then with the bearish bar that we got on on Thursday, I wanted to hedge against my core position in the market, so I went ahead and shorted just 250 shares of the Qs, just as a hedge, and today killed it over a 5-minute bars high, which was 152.34, I believe, 152.34, and I'm glad I did, because as I said, the bulls never let up, and we just continued higher up until basically 2:30s when we really broke down, and then we didn't produce much follow-through. We had one nice red bar, and then we went back up. So it was a good exit, and now I'm back basically to, I don't have a hedge now, just long the market. We'll see. We do have a clear line in the sand. I was really hoping we would get a narrow range bar today, because then we would have that two-bar combination that I talked about, in which case under this bar's low would have been definitely 100% bearish, and then above it would have been a failure, but we didn't get a two-bar combination. I was hoping, again, to get a narrow range bar. We didn't get that. So now we definitely have a pivot on the daily chart and a line in the sand. We must not break 149.49. If we do, all bets are off. We're back to all-out bearish. The market is going to need a lot of time to fix itself, because while the daily just put in a higher low and a higher high basically today, it created a higher low and a higher high. Anytime you get a sell setup failure, this is a sell setup, right? That's a sell setup. That's a sell setup, and the sell setup failed. Anytime you get a sell setup failure, you get a higher low, and then you get a higher high, all in one fell swoop. So we're starting to break the downtrend for the first time, probably ever since October. Show me another. Well, here's a sell setup failure. This was also a sell setup failure. Went up and then we failed again. But this is the second time. The second time we have a sell setup failure. So on the daily, it's starting to look a little more bullish. But I just want to point out the declining 20. I also want to point out the weekly. The weekly, while it has some room to go up, is very sloppy. It's still in a downtrend, all-out downtrend. The monthly, broken uptrend, right? We broke when you have the definition of an uptrend is higher highs and higher lows. So notice here that higher low was we didn't put in a higher low. So it's a broken uptrend. So we're going to need some time, probably if we were to go back up, we're probably going to need several months, like 6 months, to just fix the damage that was done. Okay, just to deal with the damage that was done. In the meantime, that doesn't mean you can't play swing and take advantage. I'm going to go over the swatch list, but today, for example, I have 1, 2, 3, 4, 5, 6, 7. I have 8 positions. 7 of which are long, and actually in the ACHN I have 2 different positions in it, meaning 2 different entries. Most of my positions look very similar, climactic with the market, and then a transition A on the hourly chart. See this? That's a breakout basically after a climactic sell-off. I mean, there's the ACHN, I have the ZIOP, which reached target 1 and 2, and I'm just waiting for target 3. And you see again, same. I didn't even have to redraw the line on the hourly chart. So same as the ACHN. ENDP also, same thing. Transition A, PIR, penny stock, but same exact position. CAG triggered, but wouldn't go really today. So I'm tightening the trail on this to today's low, which is 2162. Same exact idea. A bunch of plays. USO is a little different, but on the hourly it's exactly the same. On the daily it's a little different. I went over USO in yesterday's video. Feel free to look at it. But USO on the hourly is a transition A. The reason for my USO trade was because of that weekly chart, right? That climactic drop, the base, and then the breakdown with no follow through. I also saw Trump tweet about it and saying that, I don't know what he said. Actually, I'm on Twitter right now. I don't spend much time on Twitter, but I'm starting. So this is, he said, do you think it's just luck that gas prices are so low and falling? Low gas prices are like another tax cut. When somebody starts tooting their own horn about something that's down a lot, in this case, the USO, it's probably near the bottom. So I sent out a tweet. How much do you want to bet that today, January 2nd, a couple of days ago, marks the bottom in USO? So far, and GE also, the same day I tweeted, right? GE looks like it bottomed today, entry 766, stop 734, January 2nd, right? So GE also has had a transition A on the hourly chart, but a climactic buy on the daily, monthly, weekly, you name it. Monthly is even triggering. Daily is already too late now, but the monthly just triggered. At any rate, when the market is declining like this, dropping hard, that's the pattern to look for, is the climactic buy setup, or it is also called the transition D setup. What I'm referring to is the 4-stage cycle, right? Or the atom, the basic unit. That's transition A, the breakout. Transition B, the break of the trend line. Transition C, the breakdown, which is the mirror image of transition A. And transition B is the same as transition D, down at the bottom. So when the market is in a free fall, that's what sets up, that's the setup that I look to capitalize on it. And the vast majority of my plays today, not just today, I mean from the last few days, I mean the ACH and the ZIOP, I didn't get in today. I got in on this day, on December 28th. ACH and ZIOP, I don't remember what day, but this day, on the 31st, last day of the year, last year. So that's the setup to take advantage of as stocks, some more than others, react in a climactic drop to the market, to the drop in the market. Notice the wide range bar, the volume. How about plug? I mean, plug was, but I'm already out of plug. Plug was exactly the same thing too. It reached target in one day. It reached targets 1 and 2. It went up 30% basically in one day. It actually looks higher again on the hourly chart, but this one I wouldn't keep overnight. It'd be just like a 1 day swing. So in at the open, maybe out at the close, or if it reaches the 200, because it does look higher still. Like I said, I was out on the first day. It's reached the both targets 1 and 2, but still looks higher. Plug. Not on this list, but I'm aware of it because I have it on my other list. Okay. So let me show you what is on this list for Monday. We have WA. I have, as I said, I have 8 positions, and with the exception of one position, they're all long. There's only one short, but they're all long. Um, so I don't really want to add too many longs. I am going to add 2 more positions, 2 more long positions, and if I get triggered, if they trigger 3 short positions. If you're part of the SST program, the Strategic Swing Trader, you can log into the spreadsheet right now through your customer portal and get my plays for Monday. I've posted already 5 new plays for Monday. Um, two of which are coming from this list, and 3 of which are coming from this list. All right. So WATT is a transition A on the hourly chart, breakout, stop right here. Target about 875 or so. It's not bad, but look at the hourly chart. Look at the daily chart, declining 20. So not ideal. APHA, beautiful transition A on the daily, beautiful hourly breakout also. My only issue with it is we have resistance above still, right above almost. So not a lot of room, and then we immediately hit resistance. That's my biggest issue with it, but I do like the transition A on the hourly and the daily. BITA is a daily buy setup, and a possible transition higher on the hourly chart. That's BITA. CAG, I'm already in it, honestly. But I could potentially look to add to it as there is an hourly buy setup. Since it showed relative weakness to the market by not moving up 4.5% like the market did, the Qs at least went up 4.5% today. This one barely went up 1%, I think, 1.5%. So I will not look to add early in the day on Monday. I'd look for it to confirm the bullishness before adding. I'm actually tightening the stop on it to 2162 because it showed relative weakness today. FLDM, hourly, daily, monthly breakout, every time frame is setting up as a breakout. Now the FLDM is probably very wild. It does okay volume for a swing trade. I wouldn't day trade it, but I mean, last 2 days, over 1 million shares each day, about 1 million shares. So it's okay as far as the liquidity, but it looks a little wild and sloppy. GTHX is a breakout on the daily chart. This is also kind of a climactic drop, but really happened through a gap. So almost like a climactic drop. Not as good though. Weekly looks gorgeous, but again, when a stock gaps like so, it is not really climactic. It's only if it trades through, and then you get the wide range bar, right? Like the plug that I showed you, like the ZIOP, ACHN, whatever it was, the ENDP, those are way more climactic than the GTHX. And then KDP, I'm going to show you the weekly chart. It's actually a weekly buy setup. They went private, I think, the KDP, and then they re-emerged or something like this. I don't know exactly what happened. They bought Dr. Pepper and that, what was it called? Green Mountain something coffee, I think, and then re-emerged as a new publicly traded company. So it doesn't have much history, and this bar distorts the chart. But look at the weekly chart, setting up long, weekly buy setup. So I really like the KDP as a long-term play, not as a short-term play, because as a short-term play, it is quite sloppy on the daily and the hourly. If it's a short-term play, the smaller time frames, such as the daily and the hourly, need to be ready to explode, ready to go. If you look at the daily, you have to open up your own chart and look at it because my chart is messed up due to that big red bar that I showed you. I mean, this is not a good daily chart, right? But again, I like it over 26 bucks more as a weekly buy setup, long-term trade, KDP. All right, showed you some of the bullish watches. I have more, but just showing you some of the ones that I think are more ready to go for maybe even Monday or Tuesday than the rest of the ones which are more for later in the week. Some shorts, WDR, nice looking sell setup. I would have liked it to have stayed under the moving average on the hourly chart. If it had based here, it would have been perfect for for Monday. I don't like it when the moving average goes through price. I like the moving average, the 20-period moving average, to either hold above price. This way, it acts as resistance, or be underpriced when I'm looking to play long. Now, in this case, I would only be looking to play short. It's a downtrend, and we have a sell setup on the daily chart. But that moving average on the hourly is going through price. Again, I would have liked for price to stay below it and then drop, but it's still a very, very nice sell setup on the daily chart. WTW is just getting murdered. I mean, it's just dying. Look at this. Now, this was probably the strongest stock in the world for a while, and then now the weakest stock. How do stocks change like this? It's like they turn on a switch, right? They turn on the light, and then all of a sudden they go from being the most bullish stock to the most bearish, right? Lost 70% almost just in the last few months, 5 months or so. Why does this happen? What's the reason behind it all? Right? That's another topic, but I don't know if it's still on YouTube. I did a workshop, a webinar one time called Why Stocks Move the Way They Do. And I explained the reason, what happens to stocks, the trends that go climactic like this versus the ones that go in a 45-degree uptrend, sustainable uptrend, and what the difference is in psychology and all of that. So check it out. I think it might still be out there, but that's what happened. It ran out of buyers basically, and really, really weak on the data chart. Looks lower as kind of a breakdown on the hourly. It's not my favorite stock to trade. It's really volatile still. It still thinks it's a $100 stock, even though it's a $37 stock. ABC is an hourly sell setup. It's exactly like the WDR, except it's a little more extended. It's not at the declining 20 on the daily. But if you look at the hourly, it's exactly the same setup. So short, stop. Okay? The WDR has better reward to risk. This has a bigger base, so the bigger the top, the bigger the drop. So I like the ABC in terms of the base, but I like the WDR more on the daily chart. BBY is a sell setup on the daily chart right at the declining 20. What I don't like about it is it has the tail, bottoming tail still in the way. That's a short. It would be here, stop up there. And then KN is, even though the market rallied today, KN stayed relatively weak, had a gap down and a bearish red bar yesterday, and today a narrow range bar. That sets up a 1, 2, 3 pattern short. So that's interesting as a short. KN 1, 2, 3, and then MLNX doesn't look very good on the daily chart. It's the same as the KN, except the second bar, the 1, 2, right? The second bar is not forming at the bottom; it's forming at the top. But what that gives us is a sell setup on the hourly chart. So that's what I like about the MLNX, is a sell setup on the hourly chart. And then by the time it gets down to here and there, you already are, you're ready to get out of it. You'd already be ready to take targets 1 and 2. So that's what I like about it. So some bullish and some bearish ideas, not a lot of them. I have already a bunch of positions open, but I am looking to add more. Every day I have new plays that I post almost every single day. It's rare when I don't have new swing plays. Why? Because I scan the entire U.S. stock market. Anything that does over 500,000 shares, over $1 in price, I scan it. So, out of 1,500 stocks, sometimes when the market does a little more volume than average, then I get even more than 1,500 charts to look at. And then at the end of the week, I look at the weekly time frame too. To tell you the truth, I have not yet looked at the weekly. I have not scanned my stock universe on the weekly time frame yet. But the point is, if you look at 1,500 charts a day, you're definitely going to find one or two minimum, right? So vast majority of the time, I can find at least one or two plays per day swing, which is nice. It's a nice flow of basically nice plays, but nice flow of funds on a daily basis to supplement day trading, to supplement core trading. So swing trading is a unique niche that's too long for day traders, but too short for institutional traders, and that's why there's a room for us to get in there and take advantage, and that's what I love about it. Well, I hope you enjoyed today's video. I'm gonna call it a day, and want to wish you also a wonderful weekend. Let me know if you like the video by hitting the like button. Leave a comment. I'd love to hear from you. If you have any questions, feel free to reach out to me, or anybody at T3 would be more than happy to help. And I shall talk to you next week. I'll probably post another video sometime on Monday or Tuesday. Take care, everybody, and have a great weekend.